For most independent workers, the assumption that taxes are an annual April event is a mistake that begins costing money long before the year ends. Traditional W-2 employment operates on a system of continuous collection. Federal and state taxes are siphoned from every paycheck before the worker ever sees the balance. Freelancers, contractors, and LLC owners operate outside this system. You receive your gross income in full, which places the entire burden of withholding and timing on your shoulders. While the public focuses on April 15th, the IRS maintains a separate, mandatory schedule of 4 distinct payment deadlines, specifically for the self-employed. Attempting to manage a 1099 income using a W-2 timeline results in an immediate interest-bearing debt to the IRS that grows with every missed quarterly window. These are the 4 dates that dictate your financial year: April 15th, June 15th, September 15th, and January 15th. Because we are currently in July, the deadlines for quarter 1 and quarter 2 have already passed. You are currently in the middle of the quarter 3 earning window, which covers every dollar you bring in between June 1st and August 31st. This makes September 15th your next mandatory deadline. It is a fixed point on the calendar that requires a specific, calculated payment. Every dollar earned during this 3-month block is tied to that September date, a deadline many freelancers only recognize once it has already passed. The IRS enforces a pay-as-you-go mandate. Legally, taxes must be paid as the income is generated, not in a lump sum at the end of the year. When payments are missed or underpaid, the IRS automatically applies an underpayment penalty, calculated based on how much you owed and how late it arrived. Most contractors attempt to solve this on September 14th by frantically scrolling through months of bank statements and digital receipts. Digital spreadsheets often fail during this scramble. Fragmented data leads to calculation errors and overlooked deductions that would have lowered the total bill. To avoid these errors, you need a physical system of record that captures data at the moment of the transaction, rather than months after the fact. This is the 2026 Quarterly Estimated Tax Payment Planner. It is a dedicated system built for 1099 contractors and LLC owners to satisfy IRS requirements. The system operates on a 4-step loop. First, you log your gross income on a weekly basis to maintain a real-time view of your liability. Second, you use the annual deduction master checklist at the end of the quarter to tally every legal write-off. Third, you apply the included safe harbor formula to calculate the exact amount of estimated tax required to avoid penalties. Finally, you make the payment and record the IRS confirmation number directly in the planner as a permanent record. Following this physical, repeating process ensures your payments are accurate and on time, which removes the conditions the IRS uses to trigger penalties. Using this system moves you from a state of reactive panic to one of organized financial control. The immediate focus remains the September 15th deadline for quarter 3. As this chart demonstrates, the cost of a missed payment compounding. A small penalty in quarter 3 grows into a significantly larger financial burden by the time quarter 4 concludes. Attempting to accurately reconstruct 90 days of business activity 24 hours before the deadline is a high-risk strategy. Waiting to address your quarter 3 earnings increases the interest and penalties the IRS will eventually collect. The tool required to organize your income and stop these penalties is available today. You can find the link in the pinned comment of this video. Secure your physical copy of the 2026 planner to begin logging your current earnings. You can lock in your numbers today or pay the mandatory IRS penalties later. Taking physical action right now is the only true way to exit the cycle of quarterly tax penalties.